Andrea says, hello, Mike. Thank you for your great webinars. And I'm a great fan of Married Puts. I would like to ask your opinion on when to close such a strategy. In the sense, what are your profit targets? When should I take the money and run? Excellent question. This is detailed in the blueprint, but everyone has their own personal touch that they want to put on it. Let me do this, Andrea, real quick. I'm going to pause this screen, or I'm going to transfer over actually to radioactivetrading.com. So just give me a moment here. And what I want to do actually is just take a look at one of my recent trades that was closed for Starbucks. So it takes a minute or two here. We're just going to show it, but see, I'm logged in here to the RadioActive Trading account as a Blueprint owner, and I'm going to go to track record, and I'm going to go here. And it takes a while to load. It's going through all of the records of all the positions that Ernie and I closed in. You see, using the trade simulator tool, you see I'm a 60-40 win-loss ratio with an average loss in the losers of 5%, average gains on winners 6.3%, and what we expect over time, I'm only at 84 trades, not 100. But I wanted to go ahead and take a look at the Starbucks position here. We're in the Starbucks position for 97 days. And we had a 9.2% return. Originally bought the stock at $78.89. And this, of course, was on July 7th, 2022. Following the rules, I bought the November 80 put for $7.75. Maximum risk was 7.7%. And so we were roughly 160 days out in time, I think, when I opened this position. What is that? June to November. So it was just about 165. Yeah, 165. 6/7 to November 20th or so. Yeah, 18th. All right. So got in the trade. Starbucks did not do what I wanted when I first opened the position. It fell to 71.32. So what I did is I used income method number 9, and I rolled down the put, but also closer in time. A combination of 9 and 3 in this case, Andrea. Because I thought the stock was going to rebound. I thought it was the market conditions that were pulling it down on the 17th of June. Okay. I can't remember if that was a time during a Powell discussion or something that came up, but in any case, it's relevant. I rolled down to lower my cost basis on the position, was thinking about another trade. But then 7 days later, Starbucks had moved back up in price. So we rolled back up to the September 80. We started with a November 80, rolled it down and closer in time for a credit to lower cost basis, and in this case, moved back up. Sold a call against it, don't need to worry about that. Bought it back for about 5 cents. Did another sold call for 108, bought it back for 50 cents. Another call at 42 cents. It expired. Another call at 51 cents. Bought to close it, and the dividend was received. And I closed the position 89.47. And the put was essentially worthless. I held it to September 12th. Okay. So this was after a slight move up a week or two after the earnings. Managed to get 12 cents for that put, even though it was out of the money. We're holding the 80 put, stock's at 89.47. Now, so I thought it was a 9.5, but it was a 9.2% return as we saw for 97 days. I had a choice here, Andrea. This is why I'm going through this. I know it seems a lot, and I don't have the profit and loss chart for each move. I had a choice here. The stock was at 89.47. I was holding a September 80 put that was expiring, so it was only worth 12 cents. My cost basis at this time was still only around, was it $2 extra, $5 less? So we lowered it to about $76, I think, $75.80 or something along those lines. The stock's at 89.47. I could have gone out and bought a 95 put at this time in September for, say, February or, say, for March, had a bulletproof trade and continued the position. The stock, as you know, went up, I think, above 100, pulled back recently. I don't know where it is today, so I still would have had a lot of time to do it. Why did I cut and run? Because it's talked about in the blueprint that what we usually target is to see an unrealized or realized gain of 1 to 1.5% per month using the income methods in the protective structure, or with just a gain in the stock. my stock moves up 4% in the first 30 days, my married puts at a 2.5 unrealized profit. That is hitting my targets or exceeding it. This was pretty much close to a 3% return per month, doubling my expectations. So that's when I decided to take the profit and move on. Now, let's go back to Blueprint Fusion and open trades, trade tracker here. This one, I've been all over the map with, and it's been all over the place. I've been in it for a long time, since October 4th. I've been in Newmont mining a little bit longer. It is a bulletproof position, as is ANET. But what I did recently with ANET, and I think I made the right choice on this one, but I'm not sure. I know this looks very, very confusing, but simple things. Stock did what I want. I rolled up the put, dropped the risk down to 6%, sold a call, dropped it down to 3.4, 3.2 with rolling the call, 2.4 with rolling the call. Yeah, we're in December now, so I've been in this position for about 3 months. I'm at a profitability on this trade here. It's at 120, cost basis, I'm sorry, is at 121.27. ANET is at 134.70 from the initial purchase price of 120.47. So even with the income method number 4 adjustment adding to it, I'm still at a good profit here. Then the stock took a turn and we rolled down the put and closer in time. And that was in January. And then in February, 11 days ago, I'm sorry, folks, 11 days ago, what did I do? I rolled the put in from September to March. Again, I sold the 125 September that was priced at 1060. Yes, I paid $15 for it, but that was already taken into account. But by taking this from 1060, moved it to the March 140 at 940. So I got a $1.20 net credit and a 15-point higher guaranteed return. That put us at a 4.2% bulletproof status. Then I did income method number 6 by selling the 140 call for 365, buying the 145 for 235, another $1.30 net credit in, bulletproof to 5.2% on February 13th. And as you know, income method number 6 leaves the upside open. We'll take a look at that profit and loss chart in just a minute to be more clear of, instead of looking at the numbers. Why did I do this? Because earnings were coming out on the 14th. I'm sorry. Oh, yes, they were. I think the earnings were coming out on the 14th. So we bulletproofed to a guaranteed 5% return with those 2 put adjustments. Liquidation prior to that was 7.5%. So we guaranteed ourselves at least 5% of that, pretty much close to 2/3. Guaranteed even if the stock fell to 120 again after the earnings, but left the upside open in case there was a surprise. And there was a surprise, and the stock did move up, but then we all know what the market's done the last week and a half. So 14th, 15th, there we are. You can see the volume there. It was a really positive earnings. We're at a really good jump up to 144 and 145. My return before this was 7.5% liquidation value. Here, with the adjustments I made, the liquidation value was around 9.8. I think it hit 9.9, but not 10. Remember, I've been in this position for October. We're now in February. So that's all of October, November, December, January, February. 5 months, 9.8% return. I'm at my 1.5, almost 2% return per month target. I'm exceeding the 1 to 1.5. I really like to target 1.5 to 2% now, Andrea. So why didn't I liquidate the position? Well, I figured it was going to continue up, and I still had unlimited upside. But last 5 or 6 days, the market did what it did. Now, let's go back. Let me see if I don't even know if I have this correctly entered. I thought we correctly entered it into the portfolio here on the webinar account. That wouldn't be it. That would be it, and it's not correct. No worries. Let me just pause the screen here. And let's go back to here. Let's take a look at the proper structure. Okay, there we go. So now I've logged out of the webinar account, logged back on to my account. Here's the ANET position. I know it looks like gobbledygook because there's a lot going on there. 4-leg transaction, not delete position, Mike. Let's go to the profit and loss chart. Okay, so as you can see, this is the structure that we created. Bulletproof, can't lose more than 5.2%, guaranteed profit of 5.2%, unlimited upside. So when I saw the stock sort of hitting to this level, I was still in the profitable zone I wanted to be in. And if I thought if the market stayed strong, we might go up as high as 150 by expiration, possibly even stay 148 or 149. So I was being greedy. As I mentioned, I could have closed around this time for that 9.8% return. Right now we're down here. My bear call credit spread expired worthless, so let's take care of that here in the portfolio. Make sure I do it right this time. So the stock's at 130 something, 135.53. And so we're gonna, oh, you see here that the liquidation value is at 10.7% because I'm near full profit. I was only at 9.5, 9.8% when it was up to 144 because both these calls, even though they expired in a few days, still had time value remaining. But now they both expired. So let's just go expire leg. That's my 140 call that we sold. And now for the long call, let's expire that. Yep, 145 call, paid 235. We lost it all, but we got the other premium. Okay, so now with the ANET position, where are we? Oh, okay, that's weird. It's showing a 7% return after 11 days. Oh, okay, yeah, that makes perfect. I'm sorry, that makes perfect sense. I see what was wrong on the analysis there. My apologies. So it's still a 7% profit, which is what? Which is just shy of what it was if I had liquidated the position the day before. I'm sorry, instead of doing that move with the income method number 6. So I'm still in the wheelhouse of where I want to be. Now, I shorten the time frame on the put. I don't have much time left. I only have until March 17th. But what can I do? Sell the March 3rd call, sell the March 10th call, sell the March 17th call, just use income method number 1, milk it for all it's worth, and after that 5-month period, try to get closer to that 10% return to where I was. I still think this is just market conditions that pulled this back. Based on the earnings for ANET and what it was compared to some of the others in its industry, I still think that this has a chance, if the market stabilizes, knock on wood, right, Andrea? Then this stock has the potential to get back up to 138, 140, 141, 142. But I'm just going to keep milking it because it's a bulletproof position, only 3 weeks to go on the put. Liquidating right now at 7%. That's in my target range for 5 months, right? Getting close to 6 months. So yeah, it's still there though. It's still 1.2% for 5-6 months. I want a little bit more. That's why I'm keeping it open in this case. So just on the structure itself, let's just go to a married put position, new. Not going to give away everything in the blueprint area, but there's a full chapter in the blueprint on exiting the RPM. What to look for, when to do it, when to consider rolling the put, when to exit the position. What is your outlooks and so forth. Anything up today? Okay, Granite Construction is up today. Not that that matters. I don't always open a married put, and that has to be on a stock that's trading up. I was just going to use it. Okay, Oh, sorry, folks. There we go. Granite position. Not bad. Not bad at all, really, risk-wise. 4364 stock, September 45 put, 203 days out in time, only a 5.5% risk on the position. And it was up today in a relatively down market. Don't know if that's related to earnings or something else. So we got to take a look, though. When to close such a strategy? As I mentioned, my target now is around 1 to 1.5%. I'm really trying to target. I think 2% was a little excessive. I'd love to target 2% per month, but I was making too many aggressive moves trying to do that. Realistically, I'm like a 1.3 to 1.8. That's my target. So we'll keep it around the 1.5% per month. If I've exceeded this in the first 60 days, if the stock just has a 12% run and I've got a 6% liquidation value on the position in 60 days, which is more than double my target, I might just take that. But I've got to look at it first, Andrea. And what I mean by that is just we talk about in the blueprint that SIGA model, the decision-making process for when you would consider using an income method on the position. If the stock exceeds my expectations and I still think it has the potential to move up, I'm probably using that income method number 4. What would a 10% run be here? It'd put us up at about $47.64. Let's call it $48. I'd be moving this 45 put up to the 50 strike put. And that will definitely cut this risk in half. I might even get close to bulletproof status on the position. I'd still have a bullish outlook on the trade. Am I adding a debit by doing this, which is adding to my cost basis? Yes. I'd only do it if I still think that movement 10% was an aberration, and I still think it's going to move up 2 to 3% in the next 30 days following that, another 3% maybe the next 3 days following that, give and take with market conditions going up and down. Okay, so I could bulletproof it, get close to bulletproof it, continue the trade because it's winning in my account. But I had a position once I was in, what's the shortest trade I was ever in? I think it was 8 days. A married put that I was in 8 days. Took it on an earnings play. The stock jumped up 25%. Then I said, okay, that's it. I liquidated the position for about 60% of that. It was like a 13.7% gain, if I'm not mistaken, and just moved on. Didn't bulletproof it, didn't continue trading. Take that win for 8 days. Definitely met my annualized percentage return and my 1.5% target per month. But that happened once. Ernie's had a couple trades like that too, I think. Maybe not as high as much. No, one was, one wasn't. But sometimes you just, hey, this looks like a good married put. There's been a lot of talk about it in the news. The earnings are coming up. It's in the search results. 8 days, 10 days before earnings, let's open this married put. And without even doing an income method, you get a nice surprise and say, hey, maybe it's just time to take my win and move on. Okay. So your question was your opinion on when to close such a strategy. What are your profit targets? We explained that about 1.5% per month. Ernie targets 1 to 1.5% per month. When should I take the money and run? If it more than doubles your targets, whatever your targets are, Andrew, there's nothing wrong with a 0.5% target per month or 1% target per month in the protected position. I've just been trying to increase it over the years by doing different things, trying different metrics that we talk about in the blueprint. We talk about on some of the members only content as well. So I'm trying to target that 1.5%. If I have something that nearly doubles or triples it in the first 30 days or 60 days, I might just take it off the table and go. I have to admit that. And I say that with a laugh. And the reason why I say that with a laugh is because in addition to ANET, that bulletproof position I have open right now, the NEM position, guaranteed profit of 1.4%. Let's just take a look at the profit and loss chart. That's 1.1 here because I don't think I accounted for a dividend payment inside this, or maybe maybe that's Schwab, not this one. In any case, bulletproof to 1.1%. Victor, I believe it was, and I think he got me. He said this on ANET as well, and he was pretty close to being correct both times. He was definitely correct on NEM. Oh, I'm sorry, folks, I'm in the wrong places. He was definitely right on NEM. I'd say I'm break even with him with Victor's suggestion on the other ANET trade. What am I talking about here? NEM just went to the dogs in the last 3 weeks. I don't even remember what the return was here the last time I rolled up the put. I think the liquidation return, I think it was 11. And I've been in that since September. So that, again, was 4 months, 11% return. I was in my targets, I was pretty close to double, but not really. It was just around a 2% return per month, which is great. And, when Victor started looking at it, he says, well, why, when this dip happened, he says, why won't you close it now? Seen some negativity about it, and it came back up and was a little justified, and then it broke. And this is another thing, Andrea, why I wanted to go to this one. It broke below the 20-day moving average here. And I have this negative MACD crossover. Just as we talked about with the bull put credit spread, this should have been my signal here to either liquidate the position or add the income method number 12 to have the strangle position, because we dropped from 51 down to 44. This decline has been brutal. Why haven't I done a 12 since then? Because I saw it here and I'm like, well, I don't think it could go any lower. I was wrong. it dropped another 10% roughly. But, I don't want to buy it here and then watch the stock move back up in this direction because I'm adding the cost base, adding that extra put to create the synthetic straddle, synthetic strangle with the married put structure. But that is another key, Andrea, to the negative side, not to the profitable side. But let's say that here the stock had hit my targets and it was a good liquidation and I decided not to close it. I'm still at a 10 or 11% profit here within my range, and I start to see this. Yeah, I should have probably definitely closed this position as Victor suggested. I think he was suggesting it back here or up here. He picked it right. I should have probably liquidated that position. Would have been, I think, as I mentioned, around a 10 or 11% return. I didn't. We're still at about a 2% profit on this position, guaranteed 1.1, 1.4%. I'm not sure why those two numbers don't agree. I'll check that out for you later. But to the downside, just like we talked about the bull put, when the trends that I would have used to get into the position, in other words, I wouldn't open ANET right now, seeing the stock being below the 20-day moving average and this here as a married put. I might consider closing. That's also discussed in the exiting the RPM. You see the sentiment change, whatever metrics you're using. Do you exit? Do you add income method number 12? Do you wait for it to bottom and use income method number 9? I almost used 9 here. I'm very glad I did not. That would have taken me out of bulletproof status, added to the risk, and I'd be losing on the trade right now. So I didn't think that was a bottom, as you can see. It doesn't quite show that it was bottoming. The bottom looks more like this here or something like that. So I just didn't see it happening. So I avoided it there. But Victor was right. I should have closed earlier when I had the profits on the NEM position that were in my target ranges. And I didn't. I didn't follow my own rules on that one. I'm negating my earlier words that we talked about for the bull put credit spreads. It's better not to hold and hope and sit on dead money. I wouldn't call this dead money because I still have 112 days of insurance in place. But again, could have been a little bit better, Andrea. Should have been a little bit better in that case. I should have been more prepared for it. So in any case, though, bulletproof status, I'm okay with it. Haven't closed it because the bulletproof status still have 112 days. But it's getting to the point where if I don't see a recovery soon or any change in NEM, I'm probably just going to have to exit now, take the profit of 1.5%, 2%, somewhere in that range. Be happy with it. Didn't meet my goals, but didn't take a loss. Even though the stock is still up from where I bought it. But, like I said, it's declined almost 20% from 53 down to 43. So, yeah, that's brutal. That's a brutal one. But management is available. I just haven't decided what I want to do yet because I don't think I've hit a bottom. And I do think although there's more negative that can always happen, I don't expect it to drop too much further than this. So I'm hesitant to do that income method number 12 and add the extra put because I don't want to take myself too far out of bulletproof status, then just see a mediocre settling and slight rise in price and take a loss on the position where it'd be a profit if I left it where it is right now. But again, not a profit to what is hitting my target goals because it's going against me, but it is bulletproof. I'll say that. So, Andrea, even though I went off on that before I started going off on that little tangent there on NEM, just as clear. Thank you very much. You're welcome, Andrea. Set your targets and remember, as we showed before, not there, use that trade simulator tool to sort of test your adjustments. You decide to close the positions at, sorry, folks, the 1.5%, 2% return, for example. And you have a success rate of, let's say, 59, 60, 65% on your married put positions with keeping the losses to 4 or 5%. Toggle between that, see what comes out. Is it hitting your goals? You maybe need, this is why I decided to go up to 1.5% per month. Because at 1% per month or 0.8% per month, more conservative, with my loss range, as you saw, my average loss 5.3 and a 60% win ratio, I wasn't getting what I wanted out of the strategy. I mean, I was, don't get me wrong. It's just that I'm trying to become more bold now since I've been doing this for 14 years now almost. The married puts, just alone, just the married put strategy after meeting Kurt in 2008, 2009. So I'm trying to master it as best I can. That's part of my job here, is to play around with my own money, to try to master it as best I can, to give you guys better ideas and what worked and what hasn't worked over the last decade and a half with the structure, adding new ideas, new income methods, new approaches, new management, new targets. But as I mentioned, they also have to be realistic. I can't just expect to see a 3% loss on every married put and have a 20% return. There's some years that has happened, don't get me wrong. Okay, there's 2 years that happened on a couple of positions, but again, it's not the common. All right, so that is for that. And if you want more insight on the married put, remember you can go into the married put tab, of course. Check out Ernie's 4-part article here, the covered call challenge, limited risk solution. Full 9-page white paper, the sketch, introduction to the married put approach, and our preferred structure and how it can benefit your portfolio. And of course, the full course is available in the blueprint that discusses all 12, now technically 13 income methods, and that full chapter on exiting the married put in different scenarios, when to look to make an adjustment, our thoughts, when to continue the trade, when to just bail out of the trade, and guidance on what is a realistic target for the position and what you should set up for.